All right. Well, what I'm gonna do is I'm just gonna give you a quick run through, kind of an overview of my ground force and what
Okay.
we can do, and then I can show you, show you the software. In the FedEx world, there is no system of record. And so
Okay.
when I came in as a contractor, I said, "Hey, what tools are you using?" And everybody said, there are no tools. They were using spreadsheets and people. And I said, okay, well, I'm going to build a state-of-the-art tool. And once I announced I was doing that, then all of a sudden, John Haldy and others jumped in the pond because I had identified a market. I'd said I was going to build a tool for that, and they all had spreadsheets that they were using, and they kind of web-enabled those spreadsheets and took them to the market. I didn't do that. I've built a state-of-the-art system using cutting-edge AI and SQL databases and all sorts of automatic APIs. We built our own API integration machine. We can aggregate any telematics device from anyone. And so now what we have in mygroundforce is what you're more accustomed to in your business. You have a true system of record. Every workflow existent that you need to do to be compliant with the contract is automated in mygroundforce. So we're really the only true system of record. And we use technology that you would be accustomed to in a system of record. You're not accustomed to web-enabled spreadsheets. That's not what you would normally deal with. Or, custom scripts written by one person that something happens to that one person, all of a sudden you're in trouble, right? So we're a real software company. We have engineering documentation at the deck plate level. We have a specification that's over 500 pages. So we have a very strict cadence on how we develop and release software. February 1st, 2022. So 30 months. And in 30 months, we've done 76 software releases. So
Okay.
we release it. We're typically on a cadence of every 2 weeks. So it's a SaaS business at the truck level. So everything is sold as a per truck subscription.
Okay.
So I'll just show you this quick presentation and I'll show you the software. We like to say we automate, optimize, and succeed. That's kind of how you can think about our byline, if you will. And so, what we're doing in our space, and we're doing it better than anybody in the country, according to what the outside experts tell me, is we combine, shall we say, robots and humans working together on the supply chain. And mygroundforce, you get cutting edge AI software. So we're using several different types of AI. We use robotic process algorithms. We use very advanced API aggregation, and we're in the process of building our own large language model. And what that means is, what you hear out there is OpenAI or ChatGPT. We looked at those, and they're too expensive for what we're trying to accomplish with our customers. I don't think our customers would want to pay for the kind of charges that they have. So we're building our own. And what that means is at some point, you'll just be able to talk to the software and it will do things for you. So that's where that's going, and that's closer than you might think. So we have over 40 automated workflows. And then one of the key advantages of us over the competition is not only do we have multiple automated workflows, but then the outputs of those workflows are shared in the database, and they enable additional workflows. So for instance, the easy one to think about is our maintenance workflow. We have a maintenance work order system. And when you close a work order, then that triggers 6 other actions in the system. And if you were doing that manually, you would click your drop down in your spreadsheet and say closed, and then you'd have to go to 6 other spreadsheets to do what we do once you create that one output. So we take that output, we go do 6 other things for you. So it truly makes everything you do in your company more efficient. The system monitors your ELDs, and then we plan your maintenance for you using AI. And so we're constantly reminding you and telling you, giving you a red, yellow, green report on when maintenance is due. And as that maintenance comes within, say, 90 days, then we start sending automated reminders. And then once it becomes due, we automatically create the work order. And then you can go into that work order and assign it to an internal or external resource. let's say it's an external resource, when they'll receive that work order by email, and then you got to coordinate them getting your truck. And then when they complete that work order, they will send you the invoice, and then you'll take that invoice and update the work order in your system, and we'll capture the cost of that work order. And then whenever you close that work order, we will go update your financials in general, because we have a bookkeeping system on board. So you don't need to keep your books in QuickBooks. You can keep them here. Now, we're not doing accounting, so we're not doing amortization or depreciation, but we are doing P&L reports. So we will and we do those at the tractor level. So we will update your P&L. We'll update your tractor P&L. We'll update the maintenance schedule for that truck. We will obviously close that work order, and we'll update your work order history for that truck at that vehicle level. So when you click on that particular vehicle in our maintenance in our vehicle registry, then you would have a work order history. So all those things happen, and all you do is just click close.
Okay.
So that's just one example. And if you are using our system and all its capabilities, then you will, particularly when you're paired up with our Fusion service, you'll be compliant.
Okay.
So we have a feature we call RoboTrax. RoboTrax is an AI operations manager. And by the way, that's an AI generated picture. That's not a real picture. So what is RoboTrax? So we created, as a contractor, your operations managers are always on the phone the whole time. They're on the phone, and they're talking to drivers, or they're talking to FedEx, and they're really just trying to figure out what's going on. And the more trucks you have, the more calls they're making, right? And so what we did is we created this AI operations manager that gives you unrivaled situational awareness. And the way we do that is we monitor your ELDs continuously. So we're streaming your data from your ELDs from every truck. And then we're parsing that data into a few different elements, and we're creating situational awareness using that. So for instance, when your truck leaves Pittsburgh, I don't know, let's say he's going to Cleveland. So what's going to happen is Jonathan's going to get a text that says, this truck just left Pittsburgh, and here's the driver. And then when that truck, he can go about his business. He knows what was supposed to happen just happened, and he didn't have to call anybody or check anything else. He got a text. Whatever he's doing, now he knows. And when that truck arrives in Cleveland, then we're going to send a text to Jonathan that says, this truck just arrived in Cleveland. And then we're documenting all that in a report. And we have a moving map available in the system that's way better than any other map that you could look at. And then and I'll show this to you, whenever you hover your mouse over it, it tells you, this is the tractor number, here's the driver, here's the current mileage. And in the future, if you're using our system to its full capacity, it'll also tell you what the origin is and what the destination is. So it's like having an air traffic control screen. And by the way, there's no driver requirement to do anything. So in this case, you don't have to convince them to do anything. We're monitoring it independent of drivers. And the fact that you get a comprehensive trip summary report that you can use to compare with what FedEx might send you, or that you also have a notes section where you can write some contemporaneous notes on what might have gone on with that particular trip. Then you have a historical record of all your trips. And of course, you have an advanced interactive map. So this is a feature that you can't get from anybody else. And we use AI to do that. And then we have what we call our Fusion service. And essentially what that is we've partnered with some of the best folks in the industry. So for instance, on our fractional services side, we have DMG Go, and they have merged with Bright Flag Recruiting. So now we have a complete life cycle of internal support services that are integrated with mygroundforce. And then the part that we were missing was safety. And so then we've partnered with the Driver Education Network that's owned by Synergy Solutions, and they have a huge number, over 100 people on their staff, because they have over 100 customers, non-FedEx customers, by the way, that they do the entire safety program for. So they do the safety program, they manage it, the safety program. You can consider them your safety manager. They're a part of your staff. They'll run your safety program for you. They will monitor your hours of service and correct drivers and make those. They'll manage that for you. And they will do the same thing for your what FedEx calls vetter, your cameras. They'll also look at those videos, coach your drivers, keep notes, and send a weekly. What I worked out with them is to send a weekly CEO report on what happened in hours of service this week and what happened in vetters this week. You know, you got 4 drivers, 3 had no issues. This one guy did this, and we did that. And so it's essentially outsourced to true professionals that know what they're doing. So we bring a FedEx compliant safety program out of the box, including all the manuals that you have to have. We have a safety manual. Some folks have those, but we also have a operations manual that really nobody else has. And it's essentially, this is how you operate at FedEx. It's about this thick. And I wrote it in my company, and then now I'm using it as part of this program. And you can train drivers on it, and they should have 0 excuses for what's going on in their area. They should know what to do. We can bring to the table. It sounds like you don't need it at the current time, but when you hire new drivers in the future, we can bring professional training to the table, including certified defensive driver training. In my company, all of my drivers were Smith System certified. Smith System's pretty famous for their defensive driving course. And I sent some folks to get certified as essentially train the trainer kind of thing. And they came back and they were certified to train and certify my people. So with four drivers, that's just a bridge too far, right? I mean, it's $5,000 to get one of those guys trained. So, and then you're spending hundreds of dollars per driver in materials. So we bring a certified defensive driver training course, but it's way less expensive, and we deliver it at your location. So we, as I said, we manage hours of service, and we coach drivers. We manage your vetters, and we coach drivers. And then we added a couple other services at the request of different contractors. We have what we call an emergency action retainer service. So if you can put us on retainer, and if you have a safety incident, you can activate us and we'll take over your response. So we'll make sure that it's all FedEx compliant, and that we ask all the right questions, capture all the right information, put you in the best position to respond to that from a FedEx perspective and from an insurance perspective. So rather than you having to learn how to do that by having a bunch of accidents, you can bring a professional. And it's a 24/7 service. And we do a lot of that by app. And then we have what we call a tier 1 recovery plan. There's 5 safety tiers. 5 is good, 1 is bad. And if you get into 1, you're on the fast track to being a former contractor. So what we've developed then is a program where we will parachute people into your program. We'll put people on the ground at your company, and we will look at your company from soup to nuts, because what I believe, I was an aviation safety guy. What I believe is, poor safety is a result of many things upstream that are not being done properly, right? And so It's very likely that if you're not good at safety, you're probably not good at a lot of things. And so what we will do is bring folks to the table to help you look at the complete life cycle of your company, implement the right processes and procedures, and hopefully convince you, if you're not already a mygroundforce customer, to use mygroundforce to get control of a lot of these things and let AI control it instead of people, and retrain your guys and get you on the fast track to getting to having an improvement in that. If you can get, you got 90, if you in the first 90 days, if you show improvement towards tier 2, then that's a positive conversation with the senior manager. If you're still in tier 1, if you go 2 quarters as a tier 1, you may very well get an order to cure. And then when you get an order to cure, you get 45 days to come up with a plan. And then once you submit your plan, and I always coach guys, don't send them a plan 7 days. Use that whole 45 days to your advantage. And then at day 45, you give them the plan. But once you give them the plan, you can't screw up anymore. And if you do, you're out. That's how it works. And so what we try to do is give you solutions where You can recover from that if you find yourself there. Now, I'm not suggesting you're going to find yourself there, but if you did, then you could lean on us to help get you back going again. So DMG Go is one of our fusion partners, and you can relate to this. They're an Inc. 5,000 company. They've got about 2,000 customers now. Combined with Bright Flag, they've hired over 65,000 people. I mean, this is a great operation, and they looked at all the other options on partners, and they chose us. And so now we're integrated with them, and we can bring a range of fractional services to the table. You just buy what you need. For instance, we have a fractional CFO service, and then you can implement that a couple ways in your company. But essentially, then you have a professional CFO that you can talk to, and that is then going to keep certain key performance metrics for you. And then every quarter or every month, however you set it up, then you have a meeting with them, and you work on the improvement programs that you set up with that guy. If you didn't have that, then you wouldn't have that professional financial expertise, right? So we bring that to the table, but it's really hard for you to hire that on your own without paying a lot of money. So we bring it to the table at a fractional price. And so we do that in finance, HR, operations, and then we have consulting on the HR side. And of course, on the FedEx side, I'm a consultant, and I can help you do anything. So this is the consulting that I was talking about. I can help people who are coming in, and we have a consulting package for people who are coming into the business, people who are already in the business and just get started that needs consulting help, like I said. So here's just some pricing. You get a 60-day free trial when you come on board. We will help you every step of the way. We will onboard everything for you. Then we'll start teaching you the software. For the first 4 weeks you're on board, we're going to have regular meetings with you once or twice a week, making sure that you're using the software, and we're coaching you and teaching you how to use it. I tell people, if you can order from Amazon on your phone, you can use our software. When I wrote this specification, and it's been almost 4 years ago, one of the things that I told my developers is I want this developed at the kindergarten level, not because contractors are not smart, but because I don't want them to spend any time learning software. This is not a PowerPoint situation where you have to go through 6 hours of training to know how to do it. That's not what this is. It's very intuitive. Once you see how we do it, we maintain that approach through the whole system. So it's pretty straightforward. We usually, people pick it up really fast. And then the goal is at the end of 30 days, you would have a meeting with me. I would review your implementation, give you some feedback on the performance of your company in that period. And then you got 30 days more to go on your trial. We'll still be there to help you however you need to throughout the life cycle. But then you're kind of running it on your own for 30 days. If you need us, you got us before you ever start paying. So it's a good program. The RoboTrax feature at the end of the 60-day trial, if you want to use that, we charge $10 a month per truck, because I have to pay fees on that, because I'm pulling data from your ELDs, and I have to pay for that. And then all your HR payroll processing, we calculate gross payroll in the software, but then you still have to be processed with withholdings and taxes and all that, and we can do all of that for you. So there's really nothing you do in your company that we can't do through either our partnerships or our existing software. And mygroundforce customers get a 20% discount on consulting. So one of the design goals of mygroundforce is that when we want guys to, when you use automation in general, AI in particular, kind of the goal that you should have is to eliminate unproductive work. So you might have people in your company that are doing things that are required, but it's not very value add. It has to be done, but it's not really high value work. So what you do is you put AI doing all that work, and you redirect that labor to doing high value work. And so our kind of way to implement that is to maximize the value of the owner's time. The owner is the one that has the financial commitments to the company, and you need to maximize his time, because wherever the owner is spending his time, that's where the company's going to kind of lean towards, right, strategically. And so you need the owner focused on working on the business, not in the business. And so we process a lot of information and we push it to the owner's fingertips. So he doesn't have to go look for it. It's all in the same place every time. You know the schedule by which it's updated, and you know how it works, and you know exactly what you're looking at. So in our case, you never want to have to worry about the quality of the data, right? So you don't want to look at a metric but wonder about the data, because then that decreases the value of the metric. You don't have to worry about that with us. We're using your settlement, and then we're using proven AI processes to process your settlement and produce these metrics. And we can show you, as you know, we can show you the engineering documentation on how we do stuff. So if you want to compete us against the other options, ask them to show you their engineering documentation. And they'll be, what are you talking about? From my car? I might be able to get that for you. So, in keeping with that, we'll have your logo here. And when you log in, you're going to see these flashes. So we have AI robots that are reminding people of all these compliance requirements. But in the event that that reminder gets inside 30 days, then we create a flag so that the owner, when he logs in, he sees these flags. Now, look, you can have all your guys in your company using this software, and by clicking a specific profile, you can control what they see all the way down to the screen level. So if you decided you wanted all your guys in your company to have access at some point to some version of the software, and we have a driver app, so at some point you would need to do that, they would only see what you want them to see. So you don't have to worry about them seeing things that they wouldn't see. You don't want them to see. And the other thing we talk about is Tire View Live. So essentially, the number one cause of breakdowns in the FedEx fleet is blown tires. And the number one cause of blown tires is low tire pressure. So essentially what we bring to the table is a TPMS like you have on your vehicles. We have one for big trucks. And it's integrated to the cloud so that you get all that data in mygroundforce. So if you decide you want that on your trucks, I highly recommend it. And our system uses what we call flow-through brackets that bolt to the outside of the main drive axles. And we use Kevlar hoses to connect to the valve stems and bring and create the ability to air the tires up from the outside. But we also use those tubes, those Kevlar hoses. We have sensors in those hoses that measure the tire temperature and pressure inside the tire. And so now you can, that's a piece of hardware that's bolted on the outside. No one can take it off. And we stream that data to the cockpit in a RF frequency because it's higher capacity and we have less interference because everybody and his brother's got Bluetooth out there right now. And then we have a control system in the cockpit. We provide a display to the driver, and then this control center that we have that's connected to the battery then streams that data live to any cellular carrier, and then you can see it in our system. So it's a really good system, and then you can dramatically improve fuel mileage and tire life, and pretty much eliminate the chance that you're going to have a blowout on your trucks, and that's going to dramatically increase your service performance as compared to the average contractor. So it's a very valuable system. The ROI on that is about 6 months, and then it lasts for years. So you get all your money back in the first 6 months, and then you got it for another several years. You can move it truck to truck if you sell that truck. So it's an excellent system. I designed this particular package specifically for a FedEx line haul contractor. I'm working with one of the largest vendors in the world that does that. And they're the same vendor that FedEx chose to put their automatic tire inflation systems on all their trailers. Okay. So it's a no kidding company, and I'm their only partner in the FedEx space. So now we're into dashboards, right? So we have it for you, and it's all the key performance indicators that you would want to have. One of the things that I'm sure you evaluate in your systems is how fast does the screen load. In other words, that's kind of an indicator for you on how solid is the infrastructure for this software tool. Well, our infrastructure is rock solid. So with just one click, then now I'm looking at a quarter of data. And then with another click, I'm looking at 6 months worth of data. And so this is revenue. This is gross revenue. What we do is every Tuesday night, FedEx puts out the settlement. This revenue data is coming off the settlement statements. Not all the dashboards are purely settlement. We bring some intelligence to the analysis along the way, and I'll explain it to you. So, but in this case, revenue is all coming off the settlement statement. FedEx makes that available at 9 o'clock on Tuesday nights, Eastern time. We wake the AI up and it goes into your portal, downloads your settlement, uploads it to the system. We perform about 1,000 algorithms. And when you wake up the next morning, all your dashboards are updated, all your reports are updated, your profitability is updated, your gross payroll is done, and any missing dispatches, the AI has found those and put them in a report for you. And so the first thing we look at is revenue. It's near and dear to our hearts as entrepreneurs. So you have this chart that you're looking at. You can see the trends. We divide the business into line haul, shuttle, and spot. That's kind of how FedEx looks at the business. And we also normalize this business by settlement week and by tractor number, because that's how FedEx deals with contractors. And so when you hover, if you hover over the column, then it breaks the revenue down for you to the penny. So line haul, shuttle, or spot. And then any other adjustments, maybe you got paid a peak bonus, maybe you got a settlement adjustment paid or whatever, that's where that would show up in the settlement. That's where we put it here, and then we total it for you. But one of the things that you will learn is that you have to look at revenue week over week and take out the fuel surcharge, because the fuel surcharge fluctuates weekly, and that will impact gross revenue to the good or to the bad. And therefore, you want to remove that variable. And so then you're just looking at apples to apples every week. And the way you do that is you calculate the fuel surcharge and remove it. It's pretty difficult to do by hand. You have to do it at the trip level. And so, but with us, you just click the box. You click the box and bam, just like that, we pull out the fuel surcharge and we recalculate these columns. And so now the height of the column has decreased a little bit. And we've updated line haul, shuttle, and spot. We removed the fuel surcharge at the trip level, right? And so then you have fuel deducted and you know exactly what you got paid by FedEx in fuel surcharge. And then you can actually look at revenue week over week. And this is an apples to apples comparison in terms of line haul revenue. So it's a very, very powerful chart. And in the future, as you grow your company, I'm sure you're getting into it with the intentions to grow. Let's say you're in Pittsburgh, but then you have some runs in Cleveland, let's say. So you would want to look at your business. You want to see how the business is doing as a whole, but you want to be able to compare what's going on in Pittsburgh, and you want to see what's also going on in Cleveland. So we use our AI to parse that data for you. And as an example, you can kind of look at this chart and see what it looks like here. But then if I choose a region, we use the word region as a generic reference to geography or how you might want to set up the views that you want to see your data. So for example, here's the all view. And yep. One of the stations that's in this all view is Anniston. So here's Anniston. Well, that business was doing pretty well, and then it fell off. This is the FedEx transformation live and in color right here. So, and so, wow, okay, well, Anniston took a hit. Well, I wonder what went on in Birmingham. Oh, well, Birmingham trended down and then it started trending back up. So that's a good example there, right? So, but you don't see those trends when you look at the all chart, right? So what you'd be able to do then is analyze the data. I call it swimming to the bottom of the pool. You get down to the bottom and see what's going on at each individual station. And we provide profitability analysis for you at the region level and at the tractor level. So it's as discrete an analysis as you can find anywhere in the industry. So that's just one chart. There's a lot of data there. So we have bookkeeping on the system in the finance registry. You just set up your chart of accounts in here. And if you're going to use another system also, you have to match the chart of accounts so you can export data accurately, right? So, but you could just use ours if you wanted to. In my business, my accountant had access to mygroundforce. And so then they had every week, they had these updated charts, they had the updated financial reports, and all the bookkeeping was being done inside the finance registry. So and then because we have your revenue, and we have that revenue at the tractor level, and we have it at the driver level, we give you that view, and we have your cost, your fuel cost at the tractor level. And we have your payroll cost at the driver level because we calculate gross payroll. Well, we have 55% of your costs already, and we have all your revenue. And so we're already way down the path of being able to give you a good view of what's going on in your company. Mm-hmm. But then we give you the ability to put your other expenses in the system, and you can program them. If it's a monthly tractor payment, you can just put it repeating monthly. If it's a maintenance event, then whenever you close a maintenance work order, it automatically goes to the finance registry. You don't have to remember to go make that move. Okay. So it's the same kind of integration that I'm sure you're dealing with every day. So when I was a Fortune 500 guy, then we always had our rules of thumb, and I don't know what you're using in your business, but let's call it revenue per head, right? That was the one we used. Hey, what's our gross revenue? How many heads do I have? And what's the number I should be looking at? And that way, if revenue trended down, you would know I either got too many heads, or I need to get revenue to a certain level in order to pay for this overhead. So it was just a quick way. Well, what I did is crafted this metric that's we take gross revenue divided by gross payroll. And so that gives you a quotient, and then we trend chart that quotient over time. And so the individual number is important, but what's more important is how you're managing it over time. And if the number goes up, that means you're doing a better job of utilizing labor. If the number goes down, you're doing a less good job in utilizing labor. And what I see is if guys are, and this is it all depends on how much, what you're putting in your payroll report. And, if you're paying the AO a huge salary out of the payroll report, then that's going to have an impact. You just want to understand how you're doing these things. But if you're just putting drivers in your payroll report, and then, your internal overhead, let's say you're, running a bigger company and you had a couple admins or whatever, which you don't need if you use all our services, then that would drive this number down, right? So you can begin to see a drag of overhead having a drag on the business if you see those kinds of things. So if you were to hire an admin, you see this number trend down, right? And because they're not generating revenue, only drivers generate revenue. So what I like to see is when I'm coaching clients, I like to see this in the 3.5 range, but I really like to see it above 3. So if it's at 3.5, then you're at 35% of revenue devoted to labor. And that's kind of a universal target, right? For every dollar, how much revenue are you generating for every dollar of payroll you're spending? That's what it is. That's what this chart is telling you. And so that's another way of saying, if the number's 3.5, that's the same as saying that your payroll cost is 35% of your revenue, right? And that's kind of a universal target. Even when I was running other kinds of businesses, I wanted to be in that 35, 36% range on gross payroll. So that's what this chart does. It gives you a chance to understand labor utilization. And again, you can look at that by region. Then we have this chart by driver. So then you can look at labor utilization at the driver level. This is a very powerful chart. And you can see that this driver is trending in the 3.5 range most of the time. He had a couple down, and I'm sure that this had to do with either he was maybe on an unassigned rotation and he didn't get out, or you had him doing something else and where he wasn't generating revenue. But at any rate, you can analyze labor utilization at the driver level, and that's really important. And so we give you those tools. You don't have to go do those spreadsheets yourself. We give you those tools. Then we're moving on to this next chart, miles per vehicle. So, and you see this blue line. So you have the opportunity in our system to set your weekly target. So on your 3 runs or your 4 runs, each one of those should do a specific number of miles every week. So you would add those 4 together and set your target. And then when you looked at this number, you would see that I hit the target or not. It would be very obvious. It'd jump off the page. And then we trend that by line haul, shuttle, or spot. So when you hover over, you see that, what you did in line haul, shuttle, or spot miles, what was your weekly target, and what did you actually do? So you get a complete miles analysis just by hovering over the column for each individual week. Then you can look at that by individual truck if you wanted to. And then you can look at miles per driver. If you want to see how a particular driver is doing on his miles, then we give you the same analysis at the driver level. And that is going to give you, how did that driver perform in line haul, shuttle, or spot? So if you hover over here, you can see he did some long haul miles and some spot miles, but no shuttle miles. And then he did some line haul miles, no spot miles, but some shuttle miles. So you can kind of start to analyze the business at the driver level. Obviously, miles per gallon is a very important number. And it's one of the key performance indicators in your company. When it comes to fuel, what I teach folks is you have to buy it right and burn it right. One of the things of being a CEO is you kind of talk in stories, right? And you want to use words that stick with people. So if you just keep in mind when it comes to, it's pretty simple to remember, buy it right and burn it right. Well, this is the burn it right chart. And right now the FedEx target is like 6.9 miles to gallon. And if you're going to maximize the fuel surcharge, you need to maximize the fuel surcharge, you have to buy 100% of your fuel at wholesale price. And you have to, all your tractors have to run at 6.9 miles per gallon or higher. And if that's not the case, then you won't be maximizing the value of the fuel surcharge. This is miles per gallon by week ending. If you wanted to look at it by settlement week, then we have fuel cost per mile. And, sometimes that's a number. It can kind of tell you some things that are going on. If you hover over to give it to you in the 100th of a penny, 1,000th of a penny, I mean. So in this case, you're spending 57.5 cents per mile. Is that good or bad? Well, it all depends on the price of fuel, but it also, which is the biggest determinant on cost per mile, but also how much are you burning? What your miles per gallon is going to affect this number. Okay. One of the most important charts is, what I talked about, buying it right. Well, this is the buy it right chart. So when you hover over, it'll tell you bought 5% of your fuel from FedEx. You bought, a little, looks like 1% from TA Petro, and then you bought 74% from Pilot Flying J. Now, what that adds up to is about 80%. And so what that tells you is there's 20% of the fuel you spent, fuel dollars you spent, you did not buy fuel at wholesale price. And so then this would be an internal improvement opportunity to figure out, what do I have to change in the way my business executes to get this to 100%? Because you need to buy 100% of your fuel at wholesale price. Why? Because that's what FedEx figures. Most of the time you can control this. Now, here's a hack. What you find is that at Pilot Flying J, there's, Warren Buffett owns that now, but some of them are corporate owned and some of those are franchise owned. If they're corporate owned, you will get the whole full Opus discount. So you will get wholesale price. But if you go to one of those franchise stores, you're likely not going to get the full wholesale price. You're going to get a substantial discount to marquee, but you won't be getting wholesale price. And so then your senior manager has a report that's called the specs report. And since FedEx has all these discounts and they have all your fuel expenses, then they've created a report that tells you transaction by transaction where you left money on the table, where you bought fuel, but you did not get wholesale price. And what you'll see is there's a Pilot Flying J, and it says I left money on the table. Well, I'm not going to go to that one anymore. I'm going to find the ones that are franchise owned, and I'm going to go where I can get wholesale price. So that's the level that this is the kind of things that a CEO in a FedEx ground company should be looking at. You shouldn't have to worry about calculating all these numbers, right? You should be using the numbers and making decisions on improvement objectives and working on getting those improvement objectives done. Being able to be good with a calculator or good at Excel is not a most important skill for a CEO. You just need the data, and you need to know, you need to have confidence in the data, and then you take the data and go do something with it. And then we take this chart and we kind of turn it into this chart where we take your fuel surcharge and we divide it. So the dollars that you got paid in fuel surcharge that we calculated in the first chart, and we divide that by your total cost of fuel. And that gives us a number. And then we turn that number into a percentage. And that tells you what percent of your total fuel cost was covered by the fuel surcharge. So if we just pick this column, in this case, 95.41% of the fuel, your fuel cost that week was covered by the FedEx fuel surcharge. Okay, that's not terrible. Here's a week where only 83% of your fuel was covered by the FedEx fuel surcharge. Okay, well, there's a 12% difference. And that 12% came right out of your pocket. This week was 12% more, 12 cents more profitable, 12% on fuel more profitable than this week. What I teach people, and I'm sure you practice this, is when you're doing trend analysis on your dashboards, you want to always identify the trend. You want to understand the why of the trend. And then you want to decide, am I going to start, stop, or continue that behavior that's creating that trend? And so here's a behavior. Whatever I'm doing here, I want to keep doing it. And whatever I want to do there, whatever I'm doing there, I need to stop doing it. I need to get back to doing this again, right? And so what are those things? And we talked about some of those elements. And then I'm like, look, one of the things I've learned about being a CEO is if you even talk to me about the weather, I'm translating it to dollars when it hits my ears. So what I did is I took this information and I take the amount of money you spent on fuel. So I take your fuel surcharge, which we calculate in the first chart, and I subtract your total cost of fuel for the week. And that's going to yield a positive or negative number. And I'm sure you're like me, you like red, yellow, green dashboards. And so I created a zero reference dashboard. And when you do that math, if the answer is a positive number, then you get an up green column. And so there's a $740 to the good week. This is what you want. And that every time you drove a mile, FedEx put an extra 2 cents in your pocket. That's good. That's where you want to be. But here's a week where we spent $1,084 more on fuel than we got paid in fuel surcharge. And that meant every time you drove a mile, FedEx was reaching in your pocket and pulling out 2 cents. Well, really the people you bought fuel from, right? But I say FedEx. And so then you can use this chart. This is dollars and cents. This is the language me and you speak. And then you can look at it at the truck level. This is really powerful. Okay, well, I see the green or red, but what is an individual truck doing? Okay, well, this truck's doing okay. We got some weird things going on here. Oftentimes when you see this weird thing here where you got a big red and then a big green, it's a timing of the preceding week's fuel purchase, right? He might have, depending on when he bought fuel. This one would probably benefit from the fact that he bought fuel at, 1 minute before midnight. And so you ran all these miles without having any fuel purchase here, right? So you would know that, you would figure that out, but at least you're looking at it at the truck level. No one is doing this for you. And then you might look at a different truck. So, okay, well, this truck's another one that's doing pretty well most of the time. The other thing that I teach people with this chart is, let's use this as an example. Let's say that this is a truck. So that truck is spending $1,000 more per week, or maybe it's $500 more per week on fuel than you're getting paid in fuel surcharge. Okay, well, what if I took that $500 per week? I trade that truck in. I get a newer truck that's going to get better fuel mileage. That truck I was losing $500 a week out of pocket. I'm burning it in gas. I don't get that back. And so I take that $2,000. I buy another truck. Now I have a depreciating asset for that $2,000 instead of a variable cost that got burned up. And it's likely now that truck's going to generate positive. It's going to be fuel efficient and generate a green line. So now you took what was a loss and you turned it into a profit. This is what CEOs do. by having the right data in their fingertips and making decisions to improve the performance of their fleet. And then one other strategic thing you can use this chart for, let's say that if you look at this, these guys are trending down, right? And then as FedEx changes that fuel surcharge, they're going to continue to trend down on the fuel profitability. Okay, well, you know that FedEx is going to change the fuel surcharge. They're going to change it in this contract. They changed it big last year. They're going to change it a little bit in this new contract. I mean, it's in the hundredths of a penny, right? It's now gone from whatever it is to an even 7 cents, I think. But I think next year it'll make another big move, right? So what you can do is forecast your fleet. If your fleet is underperforming now, you can say, well, 2 years from now, if they change that thing, I'm going to underperform worse. So now, and then you can look at it at the tractor level, and you can begin to see which tractors you need to take out of your fleet to improve your fleet performance on fuel, so you can stay ahead of the contract. And you know they're going to change it about every 2 years. So then you might get a truck that's getting really good fuel mileage. So you might be able to hedge your bets on that truck for 2 contract cycles, right? So, or 4 years, or 2 cycles on the change of the fuel surcharge. Typically, they do it every 2 years, but they went several years without doing it because we went crazy when they tried to do it during COVID. So they caught it up last year. They went from 6.4 to 6.89 or 6.9, and now they went from 6.9 to 7. So next year they might go another 0.1, or they might let it lay, but the year after that you'll see a 0.2 move. And so you can kind of forecast that ahead strategically, and now you have a strategic plan, right? Here's my strategy for my fleet as it in respects to fuel. So there's a lot of data here, and then we have this chart, what I call net revenue per mile. So this is your revenue minus your fuel costs divided by revenue miles, so settlement miles. And then that gives you a number, right? And then you can see how you're doing over time. And so in this case, 1.67. So you have cash from operations, essentially, if you want to look at it that way, of $1.67. Well, if you go up here, you see I left a nickel on the table there. So, I could potentially add that nickel back here if it's the same settlement week, if I was running at my strategic objective of at least break even on fuel with respect to the fuel surcharge. You would have recovered that nickel if you were executing on your strategic objective. So, and then this kind of tells you over the course of time how you were doing with respect to fuel and revenue. So that's a quick run through the dashboards. Obviously, we have maintenance management, we have employee management, we have a scheduling operation. We can calculate gross payroll. We have a number of reports. I know you'll love this one. Financial report. You can just pick a quarter, and the system will go away and calculate your financial report. So as a finance guy, with the click of a button, you're getting a weekly P&L. You didn't do anything. You just use the system as your system of record for your maintenance expenses. You just use the maintenance workflows. We capture the cost. We do this by every week: revenue, fuel, expenses, payroll. So what you end up with is gross profit. Right. So, and we do that, and we give it to you. If you picked a quarter, I picked a quarter. So you get every week in that quarter, you get a month total, you get a quarterly total, and then you get a total period total. So if you'd have picked, 2 or 3 quarters or a whole year together, then they would all be broken out by, by calendar, and then you would get a total. So this demo company in the quarter, profited $200,000 on 1.2 in revenue. So pretty good.
In this tutorial, we're going to show you how RoboTrack's report works. This report shows all the trips made by vehicles and drivers according to the ELD registered in mygroundforce. They are displayed in the form of trips with origin and destination, always starting with the origin being the destination of the previous trip. Here you can add notes linked to a specific trip, and it is also possible to use GPS tracking, where when filtering by a specific vehicle and clicking on this button, It will show a route of the vehicle during the day. This route represents the entire journey taken by the vehicle during the day. It is also possible to view the RobotTrax map, which shows the position of your vehicles during the checked moment. In this button, you can update the page to have a real-time view.
So anyway, that's a quick run through the software. What do you think?